The most expensive commodity in the world right now is not oil. It isn't gold. It isn't even data. The most expensive commodity in the world is certainty. Last week, in a convention hall in Edmonton, a crowd of people booed the Premier of Alberta because she signed a deal that created certainty. They wanted her to fight. They wanted her to shout. They wanted her to flip the table over. But while they were screaming, the rest of the world was looking at Canada and doing something very different. They were opening their checkbooks. If you are watching this, you probably understand something that the outrage merchants don't. You understand that capital is cowardly. Money runs away from noise. Money runs away from chaos. And for the last few years, Canada has been loud, chaotic, and unpredictable. But the deal signed between Danielle Smith and Mark Carney is the first signal that the noise is finally dying down. And the math behind this deal tells a story that no protest sign can ever match. Today, we are going to ignore the politics. We are going to ignore the feelings. We are going to look strictly at the numbers, because the numbers tell us that the middle just took over Canada, and your wallet is about to thank them for it. Let's start with the most critical number in the Canadian economy right now. Investment capital. For a decade, major energy projects in this country have been paralyzed. Why? Not because we lack resources. We have the third largest oil reserves on the planet. Not because we lack technology. We are leaders in carbon capture and extraction. Projects have been paralyzed because of regulatory risk. That is a fancy way of saying that investors were terrified that the rules would change halfway through the game. If you are going to spend $20 billion building a decarbonization plant, you need to know what the carbon tax will be in 2035. You need to know if the federal government will sue the provincial government. You need to know if a new law will make your project illegal overnight. The fighting between Ottawa and Alberta wasn't just political theater. It was an economic poison pill. Every time a politician shouted, an investor closed their laptop and moved their money to Texas. But the Energy Accord changes the math. By sitting down and signing a framework, Smith and Carney just removed the biggest risk factor in the Canadian economy. They agreed on a path forward. They agreed on the rules. And instantly, that $20 billion that was sitting on the sidelines is now looking for a place to land. This isn't about liking the Liberals or the UCP. This is about understanding that stability is an asset class. And for the first time in years, Canada is selling stability. Now, let's look at the second number that matters, the discount. For decades, Canadian oil has sold at a massive discount compared to American oil. We sell our product cheap because we have only one customer, the United States. When you only have one buyer, they set the price. And they have been buying our oil at a discount, refining it, and selling it back to us or to the world at a profit. This is the Canada discount, and it costs our economy billions of dollars every single year. That is money that should be funding our hospitals. That is money that should be lowering your taxes. The only way to fix this is to get our product to new markets, to Asia, to Europe. But we couldn't do that because we couldn't build the infrastructure. And we couldn't build the infrastructure because we were too busy fighting each other. The New Deal opens the door for an energy corridor to the coast. It creates a regulatory fast lane for projects that meet high environmental standards. If we can close that price gap, even by a few dollars a barrel, the impact on the national GDP is massive. We are talking about billions of dollars in new revenue without drilling a single new well. That is the power of efficiency. That is the power of cooperation. And that is why the boos in Edmonton were so financially illiterate. Those delegates were booing a pay raise for their own province. They were booing the end of the discount. They were prioritizing their anger over their own prosperity. And this brings us to the third number, the interest rate. What does a political deal have to do with your mortgage? Everything. The Bank of Canada sets interest rates based on inflation and economic stability. When a country is politically unstable, its currency weakens. When the currency weakens, imports get more expensive and inflation goes up. To fight inflation, the bank raises rates. So, when provinces fight trade wars with the federal government, they are actively devaluing the Canadian dollar. They are making your groceries more expensive. They are making your mortgage payments higher. Chaos has a cost, and you are the one paying it. By signaling to the world that Canada is getting its act together, that we are a unified economic zone, we strengthen the dollar, we push down inflation, and we create the conditions for interest rates to come down further. Mark Carney knows this. He was the governor of the Bank of Canada. He knows that you cannot run a G7 economy on vibes and anger. You need boring, structural certainty, and that is what he delivered. But let's talk about the voices who are trying to stop this. Let's look at the math of David Eby in British Columbia. Eby is threatening to block everything. He calls the pipeline an energy vampire. He is worried about the environmental risk to the coast, which is a valid concern. But let's look at the economic risk of his strategy. BC is facing a massive deficit. Its economy is slowing down, and by isolating himself from the national energy strategy, Eby is betting that BC can go it alone. But can it? BC needs federal infrastructure funding. It needs investment in its own mining and critical minerals sector. If BC becomes the Department of No, capital will simply flow around it. Investors will look at a map of Canada. They will see Alberta and Ottawa working together. They will see Ontario and Quebec working together on EV batteries. And they will see BC standing alone, shouting at the ocean. Where do you think the money will go? Isolationism is expensive. And right now, BC cannot afford the price tag of its premier's politics. Eby is making a political calculation, hoping to energize his base, but he is ignoring the economic calculation that actually pays for their healthcare. And then there is the federal conservative leader, Pierre Poilievre. His entire economic platform is built on the premise that Canada is broken. He argues that the carbon tax is the root of all evil and that firing the gatekeepers will solve everything. But the Energy Accord proves him wrong. It proves that the current system can work if people actually sit down and do the work. It proves that you can have a carbon pricing system that industry actually supports, because it gives them trading credits and certainty. Wait, did you hear that? The industry supports it. The major oil companies in Canada, the Pathways Alliance, have been asking for this regulatory framework for years. They don't want the carbon tax scrapped. They want it stable so they can calculate their return on investment for decarbonization technology. Poilievre is fighting a war that the generals have already left. He is screaming, "Axe the tax," while the CEOs are signing, "Keep the framework." His math is outdated. He is selling a 2015 solution to a 2025 problem. And the Pragmatic Guardian, the voter who actually understands business, is starting to notice. This is why Carney is surging in the polls on economic competence, because he is aligning with the market, while Poilievre is aligning with the mood. Moods change. Markets endure. Now, let's address the elephant in the room: the environment. For a long time, we were told that the math of the environment and the math of the economy were opposites. You could either save the planet or save the economy, but that binary choice is false. The global economy is decarbonizing. That is a fact. It isn't a political opinion, it is a market reality. If Canada wants to sell its energy in 2030, 2040, and 2050, that energy has to be lower carbon. Otherwise, nobody will buy it. Or they will slap massive carbon tariffs on it. The Energy Accord is not giving in to the environmentalists. It is future-proofing the oil patch. It is using government policy to help the industry transition so that it remains profitable in a net-zero world. Danielle Smith understands this. She knows that if Alberta doesn't adapt, its main industry will slowly die a death of 1,000 cuts. By agreeing to the net-zero targets in exchange for flexibility and funding, she just bought her province a future. She did the math, and she realized that adaptation is profitable and denial is bankruptcy. The people booing her don't understand this. They think they can just keep doing what they did in 1990 forever. But the market has moved on, and a leader's job is to look at where the market is going, not where it has been. So, what does this mean for you, the viewer? It means that we are entering a new era of the quantitative center. We are moving away from emotional politics and back to arithmetic politics. This is good for you, because arithmetic is predictable. Arithmetic pays the bills. When you look at your own financial planning, You don't base it on anger. You don't base it on hope. You base it on numbers. You look at your income, your expenses, and your goals. You make trade-offs. You compromise. You act like an adult. Why should we expect anything less from our government? The middle that is taking over Canada isn't a squishy, indecisive place. It is a hard, rational place. It is the place where we acknowledge that we have to trade with the Americans, even if we don't like their president. It is the place where we acknowledge that we have to lower emissions, even if it costs money up front. It is the place where we acknowledge that national unity is more profitable than provincial isolation. This return to rationality is the best news your portfolio has had in a decade. It signals the end of the risk premium on Canadian assets. It signals that we are open for business, not just open for arguments. So, when you hear the noise from the fringes, when you see the angry tweets and the protest signs, I want you to do one thing: ignore them. Look at the spreadsheet. Look at the investment flows. Look at the bond yields. The smart money is betting on the center. The smart money is betting on the deal. And if you want to protect your own financial future, you should probably bet on it too. We are watching a hostile takeover of Canadian politics. But it isn't hostile to you. It is hostile to the people who profit from your anger. It is hostile to the people who build their careers on dysfunction. The managers are back in charge, and they brought their calculators. This might be boring content for the cable news networks. They thrive on conflict. But for those of us who just want the country to work, it is thrilling. It is the thrill of competence. It is the thrill of seeing a problem actually get solved. We have a long way to go. There are still massive challenges ahead. Housing is still too expensive. Productivity is still too low. But for the first time in a long time, we are using the right tools to fix them. We are using math, not noise. We are using cooperation, not conflict. So, the next time someone asks you what you think about the state of Canada, tell them this: the noise is loud, but the numbers are good. Tell them that the adults are back at the table, and tell them that you are betting on the math. If you found this analysis helpful, if you prefer hard numbers over hard feelings, please consider subscribing. We are building a channel for the pragmatic guardians of this country. For the people who know that the bottom line matters more than the headline. Thank you for watching. Keep your eye on the data, and I'll see you in the next one.